Hello, everyone, and welcome to our Champaign Blockchain Meetup event. On today, March 26th, we are joined by Dewayne Cameron and Florian Volery of Liqwid Finance. They are going to tell us about their new DeFi project that they are developing on the Cardano platform. And gentlemen, thank you both for joining us. We're excited to hear more about this and how you guys got started and where you're going to take it.
Sure. Yeah, Adam. Thanks for having us on. I appreciate it. First time being on a show like a Champaign Blockchain academic group focused podcast. But I actually think what you guys are working on and the projects that you have specifically in idea scale, really cool for what Cardano could become in terms of a distributed decision making platform. And I'm happy to talk more about Liqwid and what we're doing in the DeFi space on Cardano specifically. Joined by Florian Volery, our chief product lead. Right now, what Liqwid is developing is an open source liquidity protocol. It's facilitating money markets and borrowing and lending of different native assets on the Cardano blockchain. We're building our contracts in this extended UTXO model on the Plutus platform. So right now we're deep in early sprints and developing contracts and looking at the different Oracle solutions and what the extended UTXO model offers compared to building a similar dApp solution on Ethereum. So I'm going to share my screen and we'll kind of go through some of the slides that we presented and talk about aspects of Liqwid, where we are right now in our development and kind of what we see into the future for how we want to launch and deploy on Cardano. So yeah, just to start, a little bit of overview on Liqwid. It's a project that's actually been funded by the community through the idea scale, catalysts, kind of Voltaire decentralized governance process that's being rolled out on Cardano. Since the Fund 1 process, Liqwid's formed as a team that wanted to do something really innovative in DeFi and wanted to work with one of the main use cases and lending, swapping, insurance, asset management. These are kind of the base layers that we see building out on this open finance decentralized layer on top of public blockchains like Ethereum, Polkadot, and now Cardano essentially. So we really wanted to be on the wave of that. We've been early backers of Cardano since 2017. We understand the type of technology in this stack and what it means to have true security assurances at the smart contract layer, resource determinism. These type of things go a really long way in terms of a functional end user's experience. And we all come from backgrounds in finance and product design where these things matter the most to us. Efficiency and cost savings and time savings for the end user are what we're really trying to produce. When you look at some of the Ethereum dApps and what they've managed to do on top of Ethereum, it's in many ways actually really impressive because the public layer 1 Ethereum blockchain doesn't really scale the way you would want some of these DeFi protocols, and the amount of computation that they do on chain in terms of all of the code that's running in these smart contracts being basically executed on the blockchain and the cost that's associated with that. We looked at Cardano and the method that they took with Plutus and being able to maximize the amount of code that's actually running in a user's wallet off-chain and minimize the core pieces of the smart contract logic that you actually need to have on-chain to facilitate these money markets in our use case, right? And this is why we're going this route. This is why we've bought in to the Plutus methodology and are trying to work as closely with IOHK devs, actually, our Haskell devs, to build out our entire set of contracts. So yeah, a little more about Liqwid and how we create value on our protocol. Like I mentioned, it's an open source liquidity system for lending. We want to create a system that allows borrowers to enter at a very competitive interest rate because we've incentivized a supply of stablecoin, a supply of ADA, and other very strong liquid Cardano native assets on the platform to basically earn yield, right? And the entire system is set up so that whether you're an end user as a supplier, a borrower, or a developer building on top of the system, we've really constructed a complete ecosystem of users in our system. And the way that our smart contracts will actually operate once gone live on Plutus means that the system will pay for itself in many ways. The borrowers are accessing zero costs and really competitive interest rate loans. the suppliers in our system are earning, 80 to 90% of the direct borrower interest that's being repaid in the markets. So you're really saying this is a positive yield strategy that's low on the risk curve for suppliers. And the opportunity to access the time value of these crypto assets is really what the lending protocol use case is all about. When you look at Aave and Compound and some of these other Ethereum, DeFi lending systems that have really taken off, they're offering similar solutions in a, collateralized lending manner and trying to become more capital efficient over time. But it definitely all starts with being able to lock a lot of stablecoin on chain, and then being able to, have those competitive loans match the amount of supply you have, and really producing high utilization ratios across these markets, meaning that, the borrowers are actually, the borrower demand is truly there, and it's organic when it's a stable coin, and not like a bunch of users borrowing an ADA or another volatile crypto. So other than just, the creation of liquidation pools and what that means for, savers and borrowers on chain, the Liqwid system is aiming to generate its own cash flows. And we talk about sustainability, and we talk about moving past the idea scale and catalyst funding and into the future. What does that look like past, V1 for Liqwid? I definitely think the LiqwidDAO is something we've talked about a lot. When you look at our Medium intro series, we wrote a whole article about, having good governance from day one and what that meant in terms of using the governance features that we get with Cardano's ADA token in our LQ token to kind of drive and manage this LiqwidDAO. It's going to enable any user in our system to introduce new proposals that do things like change contract parameters, or maybe allocate a certain amount of funding from the on-chain treasury to a specific project or a specific initiative that we think is going to drive value into the future of the system. So there's many different proposals and standards around proposals and voting that we are really excited to explore alongside the community with the launch of the V1 protocol and the LiqwidDAO system. I definitely think that this is going to be not only a fair token launch project, but the ability for any user to directly engage with the LiqwidDAO means that, similar to the way we see Catalyst really taking off for Cardano, and creating kind of just workers for the blockchain, Liqwid in many ways is just working for the Cardano blockchain. We'll see the same thing happen in some of the application layer protocols like Liqwid that get built on top of Cardano, but as native assets are inheriting all of the governance functionality that ADA gets. And the last one is like distributing dividends, and basically allocating the economic profit of the protocol to all of the LQ token holders. So, the same holders who are, deciding governance and voting and introducing proposals to change certain parameters in the system, we think should be the direct users who accrue the most value of the system in terms of the economic profit that gets generated from the borrower's interests. Not only that, there's a dividend percentage that gets taken from the liquidations in our system. And the way we're aiming to do liquidations is very different than the Aave, the Compound, and the traditional lending model that you see on Ethereum DeFi. We've enabled or are working on enabling in the UTXO model a pooled liquidation method, similar to the way that our users are pooling supply, to actually be able to liquidate in mass larger positions at once, and then allowing LQ holders to share that liquidation bonus from the collateral that's been seized from that borrower as a part of that execution of the liquidation. So there's a couple different methods in our dividend, in our reserve ratio, that we're actually producing these cash flows in our system. We have a whole dividend model that we've released on Google Sheets, and I'll definitely link that here so users can take a more detailed look into what that model looks like, and change different values and see what different market dynamics would do in terms of the amount of dividend that LQ holders would receive.
So if I may add,
yeah, please.
The Cardano blockchain will have fees that are 1,000 times lower than on Ethereum fees. Also, Liqwid will be one of the first protocol being able to capture its own value and to distribute a dividend to the token holder, and also to finance its own DAO in order to further develop the protocol itself, but also the ecosystem. And also, it will be one of the first protocol to be able to supply like ADA token and to stack them.
Yeah, and just on that, point, and we'll get into this in the next slide a little more. A lot of the features that we see here, we think, okay, this is a on-chain lending protocol. These are some of the things that we see, right? But on Ethereum today, we really don't. Like Florian said, the fees and the cost to do some of the basic smart contract functions make these things really expensive for the average user. And if you're not operating with a certain amount of, a threshold of Ethereum, essentially, it doesn't even make sense to engage in these protocols just because of the cost that you'll pay to use it compared to the yield that you could ever earn in like a reasonable given amount of time. So that's definitely a big thing that we've thought about a lot. And here's a quick example of like what we mean by our on-chain governance process and liquid democracy and what that looks like in our system. So basically in this use case, we have users who are either introducing a proposal or a proposal's been introduced and they want to either vote on that themselves or have the ability to delegate their votes, their voting power really to another user, right? So in our system, 1 LQ equals 1 voting power, kind of like in ADA, in Cardano Catalyst. When I vote, I can vote with my entire amount of ADA as my entire voting power. So in this use case 1, the user is voting for himself, right? They're just taking the amount of LQ they hold and saying yay, nay on a proposal. But in the second example, we have like a delegated voting process where the user is actually delegating their voting power to a user 2's wallet, who's actually then combining the voting power of their user wallets with this delegated user and then voting on yay, nay for that given proposal. So this is just a simple example of what liquid democracy or delegated voting looks like. And it's something that we plan on supporting from day 1 in LQ, similar to the way Cardano ADA works in Catalyst proposals. Yeah, so this is a slide that talks about the allocation of the protocol revenues. We talk about different cash flows in our system, and really every single event in our system is a credit or a debit in some sense. So it's easy to think of these all as cash flows in or out of the protocol. So the cash flow in is obviously the borrower interest that gets repaid to the protocol, right? And each block, these borrower loans are accruing according to the floating APY at that moment, right? The cash flow out of the protocol is the interest that we're paying to suppliers, obviously. So in this example, if 80% of the borrower interest you paid is being paid out, to the suppliers of that market, that's our, out cash flow. This 20% is, what we consider the income factor across every single liquid market. This might be 10%, this might be 25%, just depending on the liquidity of the token and the dynamics of that market. There's a reserve amount similar to most DeFi protocols. This is serving as our insurance layer, really. It's an amount that is withheld from the suppliers of the market, but placed under the control of the smart contract within that market. Borrowers cannot access this reserve amount to open a new loan in that asset, but the suppliers do now have an additional liquidity cushion to exit that market if they want to. There's also a 1% that goes to the DAO treasury. And this is, again, like Florian said, really just generating a sustainable cash flow for the DAO treasury to fund future projects beyond the V1 rollout. There's also a dividend, and this can be 9%. This can be lower or higher depending on the market, paid out to LQ holders. And this is essentially this DAO and dividend, the net income from each market that's being swapped and distributed directly to either the DAO treasury on chain or the LQ holders. Yeah, so this is an example of, we mentioned earlier, the ability to potentially supply and at the same time have your ADA staked, on the Liqwid protocol. And what does that look like and what does that mean? So essentially, this is the ability for a user who's staking in a normal Cardano community pool to enter a Liqwid smart contract and have their unborrowed, their unlent ADA essentially remain staked in that pool, but under the control, right? Under, the ability to be called at any time by the Liqwid ADA market, right? So this is actually a very technical open research question that we would love to have implemented for V1. But more than likely going to be a V1.5 or a future feature, but we know the demand is there. And here's the example and the use case of why. There's multiple things to look at before you even get into this graph. And I kind of want to talk about just at a high level. If you think about a borrow lending market, when you're opening a loan when you're increasing utilization by borrowing that token or assets, you're essentially, going short that token, right? So you have to keep that in mind. When you borrow ADA from a money market like, Liqwid or Aave or any of these DeFi protocols, you're essentially going short on your ADA. And if the price of ADA is going up, your chances of liquidation are also increasing by that same percent, right? Depending on your collateral and what that's doing as well. But generally, you are definitely shorting that asset, and you don't want to be doing that in a bull run, right? In a market that like we're in right now, right? Traders much prefer to have loans denominated in stablecoin. And what this actually looks like on platforms like Aave and Compound today is really low utilization ratios for things like Ethereum and ETH, and really high utilization ratios for stable coins like US dollar coin or Tether or things like that, right? So what we suspect and what we're predicting in our system is there's also going to be a preference from traders to have loans denominated in stable coins like Sigma US dollar or Age USD, compared to just taking out a loan where you essentially have to go short ADA. So to basically have that unborrowed ADA, if the utilization is very low, you're going to have a lot of ADA on the supply side that's not being used. The ability to just keep it in the staking pool at the same time as it's under the control of a liquid smart contract means you need to see what the Plutus smart contract interaction with a Cardano staking key and user wallet balance can actually fully allow. Whether this is something that we can just build a script to do from V1, or whether it's something that we need to introduce a Plutus SIP and have some real conversation with the Cardano community around the security, drawbacks, potentially the trade-offs, if there are any, if they're significant enough to never allow this, or if there's something that the user demand is real for, the security, trade-off is actually not that aggressive at all, or none, maybe at all. And this is something that can be implemented with one of the next SIPs upcoming in Plutus. So that's, and Charles has talked about this in AMAs. If you look at the Big Pay Charles interview, they talked about this exact use case because I was, mentioning this with Big Pay, and the potential really starts with the ability for Cardano ADA to not be locked during staking. So all of this comes from the way Ouroboros is actually assembled, meaning that when you're staking your ADA in a pool today, it's not actually locked in the system. There's no bonding period. You're free to sell that at any moment. And it increases the liquidity of ADA because users don't have a lock period. And it essentially is what fundamentally will enable a feature like this to happen in our system. So yeah, let's go through this use case and talk about this. And I'm sure there'll be questions around this. Florian, if you want to take over and kind of, go into any moment, please feel free to do so.
Maybe I will just add some point on the previous slide, Dewayne, if you can go one slide backwards.
Yeah.
Just to explain also how the protocol is financed itself. So from one hand, the borrowers will pay an interest rate, maybe 5%, and then the protocol will pay an interest to the suppliers, maybe 4%. And this 1% is what we call the interest spread, like the margin or the amount of money that the protocol is earning. And then what we do, we allocate half of this operating revenue to the reserve. And as Dewayne said, this is a kind of reserve if something happened on the protocol, or and also to the insurance layers. And then for the other half, we will use 10% of this other half, so it's 1% for the DAO. So the DAO is this ecosystem, so it's called a decentralized autonomous organization. So it means that the community through the votes will be able to vote on some project in order to further grow the ecosystem or to improve or develop new feature on the protocol. And the dividend is an amount of money that we want to distribute directly to the LQ token holders. So this is really totally a new feature in the DeFi space. Nobody was able to achieve this on Ethereum, especially because of the high gas fee. And Liqwid, we want to capture this value and give this part of the net income revenue to the LQ token holders. And these people, in order to receive this dividend, they will have to deposit the LQ token on the platform, and the schedule of distribution time will be the same as the epoch time or epoch schedule on Cardano blockchain.
Which is every 5 days. Great point. Yeah, so in this example, what we have are 3 different users who have some amount of ADA staked in their wallets in a community pool, right? And now they're basically entering the Liqwid protocol to supply that ADA, right? And in doing so, that transaction, they mint their QADA as the receipts of the amount they supplied plus the interest that it's accruing each block. And now they have a QADA account balance, right? So they're in our protocol. Their ADA is completely, essentially under the control of a smart contract. And their QADA is representing that deposit plus interest. But there's a utilization ratio, meaning there's an amount of borrowers who are actually using and putting this ADA to work in terms of a loan that they have outstanding in the system. And like I mentioned earlier, just the context piece of this, the utilization ratios for cryptos like, Ethereum versus a stable coin are just really lopsided, right? Traders want stable coin denominated loans. So the ability to have your ADA that's not being used in the system actually just remain in your community pool, under the control of this smart contract logic is essentially what we're trying to build this bridge from Plutus smart contracts into Cardano staking keys. And the way we do this is actually we build a transaction body in the in-app UI that users can present their staking key when they're actually at this step of supplying their ADA to the market and minting right before they mint their QADA. Enter their staking key and give the smart contract access to control their staking balance. It would then just read the community pool they entered in, ensure that the ADA is restaked to that pool, and at any moment when a user who wanted to open a loan in the ADA market came along, have the ability to draw from that balance. So yeah, this is essentially the functionality. This is in a nutshell how this would work. This is an open research question, and we're working with some of the researchers at IOHK. Our Haskell team at M Labs is diligently doing research on this, and we definitely think that we'll either have a solution presented by V1 and a half timeline, or a Cardano Plutus SIP, implemented or presented to the community, with the complete security analysis, a complete, conversation around the trade-offs, the demand around this type of product feature, which we think is really real. And yeah, that's kind of what
if
this
I can just
showing.
add the Q value so the people who listen us, it's kind of, you have to imagine the protocol will have a kind of accounting on the back end. Sure. That will be able to understand and to see who deposits which asset at which moment. And then when we compound the interest, the protocol is making this accounting per wallet in order to know what is the amount of interest or supply interest to be distributed to which token, to which users. Right.
Yeah, QADA is essentially capturing the amount of borrower interest being repaid, and the suppliers can at any moment redeem their QADA or any Q token for the underlying asset, in this case ADA, right? And what they're doing when they redeem is they're capturing the interest at the moment they entered the market, the interest that it's accrued since the moment that they're now redeeming and exiting. So that's essentially what the Q token is capturing. It's the time value of all of these crypto assets. And yeah, so that was all we wanted to present here. I'm happy to field some questions or even really talk more about the Cardano Catalyst, decentralized governance experience and our insights, because I think that's actually really interesting in what that funding model means for future Cardano projects, DeFi and non-DeFi. I think that right now we see the NFTs are all the rage, and I can't even tell you how many NFT marketplace proposals I've seen in the Cardano Idea Scale platform. And I actually think it's really cool because you're saying, wow, there's 10 or so independent teams. 1 or 2 of these are going to build a really compelling protocol and system. And that's just like a community led and funded, project and event, similar to Liqwid in many ways, right? So it's actually a really cool model for funding and just decentralized decision-making in many ways.
And also maybe we can explain how we have met and what is Catalyst for the people who don't know. So Catalyst is a kind of open-end forum where everybody can submit an ID because Cardano has allocated some part of its own money to finance some project. And the selection of this project is performed through the Catalyst project, which is a community-driven project selection. And there, I remember it was end of September. I said, okay, I had this idea. I want to publish it on Catalyst. So I wrote my idea of liquidity pool. And then I remember a moderator contact me and say, hey, there is another team that have a similar project as you have proposed. Are you working together? And that's how actually I contacted Dewayne, and how we quickly found, okay, let's work together and build this project.
Yeah, that's definitely a great sum up, Florian. And it was so funny because, you know, reading Florian's proposal, I was like, wow, this is like, you know, this has got to be the point of something like Catalyst, where you have like-minded individuals. In this case, thinking of the exact same, you know, liquidity solution for lending, to be able to just come together and quickly start collaborating and actually build like a creative environment for that. That's like positive and really kind of fostering collaboration amongst, you know, individuals who you otherwise really wouldn't know. It's definitely a way to build trust quickly, you know, to prove out concepts and ideas with people who either have the experience like Florian and the background that he has in this, you know, financial and just asset management space, but also just allow people to experiment entirely new concepts and ideas that they maybe have always wanted to work on, but because of work or, you know, because of, you know, the existent status quo VC model have never gotten a real chance to take a shot at. But yeah, it's a really cool story of how we met, and our entire team, you know, we've definitely been Cardano focused from the start of this. And I've known Josh since 2018. You know, he's been around doing Proof of Africa and really spreading the word of Cardano around Nigeria and trying to get developers in that African open source, you know, space really excited about building on Cardano and running stake pools and being a Cardano ambassador and all those things that our co-founder Josh Akban does. You know, it's definitely great to see young people who are really excited about this technology. They understand the differences of Cardano and you know, Ethereum and what makes this platform a little different. And I think the on-chain governance aspect of this is massive, and you really can't, you know, it's so understated in Cardano right now, because when you look at how fast the treasury actually grows, it replenishes itself at a rate that's way faster than actually what's being taken out of it. And you think about what it's going to look like a year from now when there's, you know, multiple funding rounds running in concurrent that are in the multi-million-dollar, you know, 7, 8, you know, and your imagination goes, wow, there could be 100 NFT protocols built in this platform, you know, and one of them is going to definitely be dominant and be great. And there's going to be 100, you know, DeFi protocols like Liqwid. So whether we're the first or, you know, whether we're, you know, one of those 100, we really just kind of want to set a standard for, you know, one, having a fair token launch, you know, having a very community-led from day one process, but two, just being really transparent on what we do, being able to try to invite developers in and, you know, take part in what we're doing as early as possible, and just having that whole ethos of saying, hey, decentralized finance has to come to Cardano. It's almost like, you know, if Cardano is going to compete against Ethereum, it has to have a very robust DeFi ecosystem, and in many ways, Liqwid is trying to kickstart that. But like I said, Idea Scale and Catalyst, there's going to be hundreds of these DeFi protocols, and many are going to succeed, many are going to fail, right? But the point is, you have this method, this decentralized cloud in the sky, this ability to try fast and fail, and this ability to try fast and succeed, right? I don't think that Ethereum or any of these other blockchains actually really have that. When you look at Gitcoin grants, it's like it really is just like a micro example of what Catalyst already is today. And that's like the prominent decentralized funding method for Ethereum. So yeah, I really do think that Catalyst has been monumental for us, how our team formed, how Liqwid is being funded, but also just for all of the future DeFi protocols that are building on Liqwid, competing with Liqwid, you know, building the swaps and the yearns and all these other things that have to come alongside like a robust DeFi economy.
Just also, Liqwid applies, so by Catalyst, every 6 weeks, more or less, there is a financing round where we publish our ID, and it's a community who vote for us or for other project. And during the first round, Liqwid was the second best voted project on Cardano.
Yeah, so for anyone who doesn't know about Project Catalyst, That's the sort of incubator of ideas that the Cardano Foundation, I think officially, runs. And so they have money out of their treasury that they grant, but it all comes from votes from the community and input from the community, so that when you guys give your proposal, you get to have several rounds of questions, and you're asked to refine your idea and explain it more and sort of show why it's going to benefit the community as a whole. Just out of curiosity, how much have you guys like gotten out of those questions that you're asked from the community, and has that ever changed what you're doing?
100%. We've got a lot out of it. Collaborations for folks, working on white paper translations, as deep as, people who can work on actual iOS mobile apps for us when that time comes. There are so many developers in that idea scale platform, whether it's the dev ecosystem, the DApp challenges, right? And they are all like eyes on looking at these proposals, the ones that they're submitting, and also everything else that's out there that they could potentially work on behind the scenes. I think what's going to become a really popular model in the future is, as really bigger funding rounds start to happen and some of these larger scale projects get funded, you'll see like other third-party developers who are just in idea scale and have the ability to help them start to just latch onto those teams and add value in specific ways that they can. But yeah, there's actually, shout out to Rodrigo. Rodrigo is a Cardano ambassador. He's a stake pool operator, does a great job in terms of helping out with the whole Catalyst community and just like helping folks understand the different components and where we are in different rounds. But he's actually really, I would say he's like one of the smarter DeFi analysts I've seen in Cardano, and understands exactly what's been built out on Ethereum right now and the different solutions that exist and how they kind of compose and build on each other. And Rodrigo has introduced several different like really cool examples of things we could do in liquidations, risk management, and kind of how we're even structuring governance in our system, and always demanding that transparency to the community. And he, to me, represents like the epitome of someone who's like working for the Cardano, community and blockchain, and has actually in many ways been empowered through Catalyst. And we have a proposal together. It's a community-defined DeFi challenge for Fund 5. And he actually did a lot of the legwork on just doing the complete analysis and benchmarking of what Ethereum DeFi systems have actually managed to, capture value and really launch. When you look at the DeFi Pulse and like what the top Ethereum DeFi dApps actually do, we have a systematic plan and structure to start saying, hey, let's either attract these teams and have a mergers and acquisition style to try to get some of these protocols to build on Plutus, or just fund the top idea Catalyst teams who are trying to build similar things that we've identified as like key target dApp and use cases that you have to have in the DeFi space. And Rodrigo has like really led that process. So yeah, definitely shout out to him and all the other awesome men and women in the Cardano community, our Liqwid Discord. Definitely every single day we get hit with very cool questions, concepts, and ideas. So it's always exciting to keep me on my toes.
Awesome. And I know that, there's a lot of different protocols out there, and this is, being built on Cardano. But what, as, we might see more blockchains starting to be able to interoperate and work together, do you guys have any ideas of bridging the gap? Do you guys want to kind of stay in your niche, or do you have ideas of how you could like work with protocols that are in Ethereum or in Tezos or something like that to be more cross-chain?
Yeah, we actually absolutely do. In fact, we started this project pretty agnostic and actually doing, like, I consider myself a student of the DeFi game, and I've benchmarked most of what we're building here to the Ethereum DeFi protocols that have success. Like, you can't deny that they've really built a whole economy and sector on Ethereum, and not looking or benchmarking to what they have done already. I think, would be, foolish of us, even though the design patterns in this UTXO model and Cardano are very different. There's a lot that you can look at and see from just a high level economic standpoint, how the cash flows work, how the system interacts with, the different value players and the different, components of these protocols. Even the yield farming contract, the first piece of this in the initial product that we wanted to introduce, we built that in Solidity. We wanted to, kind of launch that on the KVM and actually give the Cardano cross-chain, transfer, that ERC20 converter mechanism that's currently being in development, a shot, and see what that would look like in production, and the ability to send your ADA from a, Cardano, main chain Shelly address essentially to this KEVM sidechain. and then, you know, have a Solidity contract running that's powered by, you know, native Cardano. You know, that KEVM sidechain is not exactly where it needs to be. And we looked at other options. There's, you know, Binance Smart Chain, where a lot of other teams are launching on. There's other options where you're seeing kind of pre-product teams launch yield farming contracts and the ability to come in and earn the governance token on something like a Binance Smart Chain or like a Matic or one of these, you know, layer 2 EVM chains, and then building their initial, or, you know, their V1 on like Polkadot, or, you know, if they're going to build it on Cosmos or one of these other blockchains, right? So I definitely think that, you know, we went down that path, we explored it in depth, and we'll probably, you know, at some point in the next couple of weeks, even release our testnet app, which would like mini protocol yield farming contract, you know, on a ETH or Binance Smart Chain testnet. But I'm saying the ability to do that right now, it's very limiting in many ways. Like when you explore that and when you get into actually what it looks like, and to be honest, Binance Smart Chain has the best like built out solution right now in terms of having a bridge that allows you to send a native asset to you know, cross chain and interact with some Solidity contract. You're still having to like live and only live in the Binance Smart Chain world, and it's like a one way and back kind of you know, method. I can't, the true cross chain environment that you see where you want to go from Binance Smart Chain to Cardano to Polkadot, it doesn't exist yet. And actually what's best right now is to just pick the chain that you're going to run the most of your infrastructure on and try to build around that. And, you know, if Cardano had the sidechain connection with KEVM, that would be a great, you know, initial, you know, foray into this whole cross-chain, you know, environment and the future of what I think these protocols will be, actually, where you're saying you have a liquidity protocol that's drawing its liquidity from multiple different chains where ADA lives. Because to be honest, there's a lot of Cardano ADA that lives on Binance today. So it would actually, you know, in many ways, from a strategic standpoint, make sense to try to draw liquidity from the Binance Smart Chain if possible. But I think for now, with what we're doing, you know, the Haskell team that we have on board, and just the advancement that they've made in Plutus, we're really confident in just building our entire protocol on Plutus and launching it there, yield farming included, and not so much worrying about, you know, trying to do really cool, I guess, fancy things with cross-chain swaps and bridges and things like that for now, and let that space maybe mature a little bit. Let's see what the KEVM looks like, you know, in the future, and see if, you know, that's something that's worth exploring. If real value starts to get built on that KEVM, it would make sense to definitely build, you know, some sort of cross-chain integration so you could interact with the Liqwid Plutus contract from the KEVM sidechain. So yeah, these are definitely things we think about a lot.
Hey, I have a quick question.
Sure.
Thank you both for the presentation. It was really nice to see how it works. And I love how the governance tokens are incentivized by putting a portion of the interest back into them. Thinking about that reserve and like that it will be used for development funds in the future. What are some things that you would like to see those funds being used for in like 2+ years? And I know you kind of mentioned right there the idea about like the interoperability across change, but like, are there other things y'all are thinking about that you can't tackle right now, aside from like the staking pool issue, which may or may not be V1?
Yeah, that's a great question.
If
I'll let
I may.
Florian, yeah, please.
Yeah. So I think something that people currently totally underestimate is the power of Atala. So Atala, it's how we will move from just project on blockchain to enterprise blockchain solution. And once we have Atala, we are able to have like digital ID on the blockchain, to have like a customer database, customer relationship database. And once we have this, we can copy paste the whole banking world on blockchain. And this will be the next level. So, you know, but previously I was a banking auditor, but also I did management consulting for banking. So now I'm in the investment sector. So I know exactly what we need to have in order that institutional players want to use blockchain, because our goal is not to have this collateralized loan that we offer, but we have like a non-collateralized loan to offer. In order to do so, we need to have this feature of Atala in order banks can perform the KYCs, all the compliance activities that they have to do, they can do it on blockchain. And if we are able to offer this to Liqwid on top of it, then, for example, we can imagine that some institutional will use our platform as a main blockchain platform for doing some loans.
Yeah, secondary product offerings around identity and then, credit following shortly after that are certainly things that we're very interested in, and using the DAO treasury to be able to fund some of those would be actually really interesting. And that's, part up to us, part up to the community and the proposals that get introduced from that process. But yes, I think that's a great question. And the secondary product offerings is certainly something we think about, especially in that credit identity space.
And if I may, another thing, if you think about, if you want to replicate the whole financing world on blockchain, what do you need? You need first to have the liquidity. Then you need to have the ID. You need to be able to do all the compliance works. Once you have this, and you can also do some swap, do some DEX, then you can start thinking about doing some insurance product, like linked to some life insurance or some pension. You can have also the whole ETF. You can create a fund. You can do the rebalancing. You can do the investment. You can do everything. And the next key part is having the ID on the blockchain.
Yeah, and it's funny you mentioned insurance, Florian. I was just reading an article on some of the UTXO global state guarantees that you get in Cardano and Plutus smart contracts, essentially. So the insurance sector is going to be very robust on Cardano because of these things, right? Because of the easy ability to kind of access what the entire UTXO set looks like across a given contract or protocol, you'll be able to make insurance claims and essentially create more robust prediction markets around some of these contracts, either going up or down, or the outcome of these contracts, and be able to easily update and see those things in a pretty decentralized way. So I definitely think, again, there's what's been built on Ethereum and the DeFi model there, and they've definitely taken a hack at trying to do insurance and things like that as well. But then there's this functional UTXO model that Bitcoin has really proven out, and that Cardano has just extended with this whole building a smart contract layer like Plutus and extending the UTXO model to do metadata and things like that on top of it. So yeah, there's going to be entire new ways to do things like insurance because of this. Right now the design space is just so massively underexplored. It's going to take months to a couple of years to really get something that's, I think, a viable insurance product out there, but it's certainly coming.
I'm glad to hear y'all are thinking about that, because I've always wanted there to be under collateralized loans from these liquidity pools, but how do you do that without identity? And so it's nice to know that, it's one of the things I'm most excited about with Cardano is the ability to extend that credit and identity, and really hoping it works out.
Yeah, thank you. I think if you look at Aave, they actually have done something pretty cool to try to introduce under collateralized lending. They worked with OpenLaw, which is a legal DSL on Ethereum. And they've built kind of almost like a credit delegation. So, if Rachel, you trust me, you can delegate some credit amount to me, and then it gets, by some open law DSL smart contract magic, that gets wrapped around this essentially zero collateral loan. If there's arbitrage, not arbitrage, if there's arbitration or, some legal dispute that's needed, the open law DSL is kind of there as this fail safe, even though you're really just entering now a zero collateralized lending that has maybe some little notion of identity because, like I said, me and trust me. So that's a primitive way to try to introduce it. I think there's much more robust models, and Atala Prism, what that's going to represent. And if IOHK is really on pace to onboard 100 million users in the next 12 months, like they say they are, that could be a total game changer in terms of allowing users to flood into DeFi markets, provide liquidity with identity tied to them. So now who your borrowers are. They can actually potentially own the transaction IDs that are tied to their repayment history, being able to monetize things like a credit score because you weren't getting liquidated or you were repaying your loans. These type of things are going to be huge in the future data economy, and they're all going to be linked in this Atala Prism aggregation layer. There's going to be, an identity module and a Prism. There's a credit and a finance module, and then maybe even a DeFi module where you'll directly interact with Liqwid from the Atala Prism wallet. So I definitely think that there's product offerings there. We talked to some of the companies who aren't even in blockchain yet, but work in places like Sub-Saharan Africa and India and East Asia, and their whole focus is on trying to build easy models to do zero collateral lending in a Web2 kind of traditional finance way, where they're using identity to, you know, read data points in someone's mobile phone and then output some credit line and score attached to that. But once you kind of have that system and that, once you have the API to their data risk model, essentially, you can integrate that into Untitled Prism and then build a whole, verse of products around that, both for deciding what those credit lines and credit scores should be, and just being able to kind of output some score on repayment history from the transaction IDs on the Cardano blockchain. So there's actually a lot of like interoperability between this traditional finance and DeFi world that's going to happen, and Untitled Prism to me is going to be like the medium for that kind of bridge to happen. And I actually really look forward to trying to directly have Liqwid built into Untitled Prism, but also, like I said, secondary product offerings with some of these companies that are definitely going to integrate with Prism. It would go a long way for Liqwid.
Yeah, I'm going to echo what Rachel was saying. I think that's one of the most exciting ideas of this. I mean, swapping pancakes and providing people with the ability to just trade money for the sake of trading money is great. I mean, don't get me wrong, we have first world problems that people can use this for, but the idea of opening this up to the developing world and allowing, perhaps people who are in position to offer their credit to go out on a limb for someone and say, hey, I don't know you, but I like your story. I want to help you. I will extend my credit for you, and do that over and over based on what they built up to help those people build up their economic identity is going to be a huge part. How far out do you think this kind of thing will be? I mean, how much are we going to need to build to get there?
Yeah, it's a great question. I mean, like Florian said, it definitely all starts with having secure liquidity pools on chain, and not just like one or two. Like, you really do need to build up like 10 to 20 of these protocols and have diverse and options, across the system. But the other thing is, like, these companies already have this product live today. They already, are servicing millions of users across places like West and Sub-Saharan Africa with these credit scoring products, and to integrate their existing, models into like, Untitled Prism APIs and building a whole mobile app around that. That's actually not, to me, like a very long time frame task or project. It really depends on when Untitled Prism is ready to go live, when Plutus smart contracts are ready to go live. But like you mentioned something, it's very different than the Ethereum model where you're doing credit delegation through like I trust you. It's actually like you're trusting a company that's built this data risk scoring model. They have KYC and AML licenses already, locked down for their service and product offerings. They're now saying, okay, we have users who have come through our system. We verified their identity. We verified their data points through our model. This is the credit score that they have in our system, right? And when they have the liquidity in their house, they'll just directly give them a loan on their platform, right? There's several different apps doing this, and we've talked to a few. The thing for Liqwid, and what could actually make our protocol, a really early success in this space of trying to do, under collateralized lending in the emerging market where users truly need it and it can be a capital efficient product, is saying you can actually tie that Untitled Prism and that credit score that, this, data model outputted for them with something like maybe a non-fungible token, and then say, okay, you've just have the FICO equivalent of a 600 credit score. Because of that, your credit line up to 500, ADA is set at this amount. If you repay this, if you include the transaction to show your repayment or your, ability to not get, liquidated, essentially, you can come back and grow your credit limit, right? And your score will increase, and you mint a new NFT, right? So there's actually a really cool model that you can build around this system, and part of it is the ease of minting things like NFTs on Cardano and what that actually means. Using these NFTs to actually have rights within a contract, not just like an NFT that you're like listing on a art marketplace, but like using these to have like roll tokens is what they're calling them at IOHK. It's really like when you look at like the derivatives markets and how these different contracts trade at like premiums and things at certain points in the contract's life cycle, it's actually really impressive to be able to do something like a roll token for NFT under collateralized lending, because you're saying these users are directly tying the product that they're using in Untitled Prism to a DeFi protocol that's actually allowing them to do this under collateralized lending in a very secure kind of like, I trust you because you've done KYC AML model. So that's kind of what we look to implement.
Yeah, that's excellent.
Is there anything to work with right now around Prism, or is it more just like something that they haven't even put out for developers yet?
Yeah, it's not open source yet, but they're really working hard. And I think in the next couple of weeks to months, even they're going to start announcing some things around Prism, deals that they have in the pipeline. I feel like their commercialization strategy for Prism isn't completely known yet. They definitely have one at IOHK, and they keep it tight to chest. But I think what they really want to do is like integrate with companies that have these existing products, like the ones that we've mentioned, and we're actually under NDA, so I won't even like say anything, or I don't even know if I've said too much, to be honest, but I think it's fine. I think that what they're trying to do is take existing products and services and just themselves build the mobile, Kotlin or iOS app and say, okay, now you have this, extra module within Atala Prism, and we're using the API from company X that does credit risk scoring, or we're using the API for this company that does like some accounting services or CRM model on the blockchain. So I think that what's going to end up happening is they're going to build a lot of it in-house themselves, and they're not going to like ask developers to start building applications on top of Prism. They're definitely they have a lot of different like business partners, and I'm sure enterprise folks who reach out to them and say, hey, we want to build app X on top of Prism. So they really have to kind of pick and choose. But the DeFi and like the identity, the credit space is like, that is directly what Atala Prism is here to kind of address. So I definitely think they're taking like a very deep look at some of these product offerings first. But yeah, I'm as excited and interested as anyone else to see Atala Prism get open sourced, and I want to see third-party devs flood in, because like similar to Liqwid, we want to have as many developers who are tinkering and building with our SDKs and actually interacting with our protocol, because it means like you're building that developer mode that you actually need to have like an early successful protocol. When you look at the top Ethereum dApps and what their community-led development looks like past the V1, you're incentivizing them, with early governance, ownership, and things like that. But at a certain point, you have to have developers willing to build products on top of your model. You have to have clear documentation, SDKs, and things like that ready to go. So I think that that's kind of coming and in the pipeline, but probably still a few weeks to months out.
I think that if you go to atalaprism.io and then you click to the page use case, you already see all the use case that the IOHK is thinking about. And of course, we don't know exactly what they want to do, but I can show they have already anticipated to which area we need the most digital ID. Yeah, and this is coming.
All right. Well, kind of getting towards the end, I did want to ask, so I think that it's been announced basically end of July is when they hope to launch smart contracts officially, maybe August. We'll see how everything plays out with burning that in. When that happens, what are you guys looking at for the time frame? Is that when you guys expect to launch as well? I know that you guys have been working in the test nets and working hard to get everything ready.
Yeah, I would definitely say around that same timeline. And, we're hoping to, like I said, work closely with the IOHK devs, whether it's a part of that private testnet, like you mentioned, Adam, or even coming on later once we have our, full contract deployed on the Plutus testnet, the public version. Really just trying to have as many touch points. And we do. IOHK has been great. The DevNet Slack has helped us out so much, and just being able to reach out to some of the actual core Plutus devs who are building this smart contract layer and hit them with our technical questions when they come up. It's been a huge help for us. So yeah, we're on pace and on the same timeline as IOHK, and we're swimming right at the same pace, and we're just trying to keep up with them. And it's great, to see them announce like very confident timelines and things like that around Alonzo. Like, this has been a long time coming, and I think that when you look at what the Shelley deployment looked like and how successful they were with keeping on the timeline that they set out months before that, it gives us actually high confidence in their ability to deliver Goguen on that same timeline, and not just Plutus core, but all that infrastructure that's built up around it, that's needed to have Plutus Foundation is what they're calling it, kind of live contracts on chain in August. But yeah, we're excited. End of July, early August, definitely be ready to go by then.
Excellent. And your website, if anybody wants to find your project and check it out, is liquid.finance, LIQWID. Do you guys have any final words as we wrap up?
Yeah, please follow us on Twitter at Liqwid Finance on Twitter. Sorry, our Discord link is in our Twitter bio. Check us out. Our Medium intro articles are also a great place to take a real high level look at the protocol and what we're building from a governance, from an actual protocol functionality standpoint, and things like that. So yeah, thank you for having us.
Thank you for having us. Yes.
All right. Thank you guys both.